Hello again, welcome back to this video. We are going to be taking a look at an update on how the trading system based on the Gemini Exchange is doing. So we are looking at a system that was deployed at the end of January. Just a little update on how the markets have gone since then. There's been some turmoil, and in the second half of February, it was mostly kind of a downturn. So what we're going to be looking at is some of the impacts of that, and it's not good for this trading system. It's not kind of well equipped yet to identify like a danger zone where, oh, this might look like an attractive dip to buy, but maybe it's smarter not to do it right now because we're at a relatively speaking high price compared to the past. So that's kind of the pitfall we fell into. If we look over here, we can look at Bitcoin at the hourly interval, and we can see that that about the time that the system was deployed, you have this relatively low price. Prices go up. The system was doing well here because it tended to buy here or buy like a little dip like this and then sell a little peak like this. But then somewhere around here, it buys in, and a lot of other symbols as well, not just Bitcoin. But the system buys into different symbols that are pretty highly correlated with Bitcoin. Ethereum, Litecoin. A lot of the tokens are pretty have significant correlation, and then the price just kind of tumbles for a bit. And so even here, you have a dip, you have a peak. But if you already bought in somewhere up here and there are only a few trade slots available for any given token and time comparison, then you're going to miss out on an opportunity like this because you already put your eggs in the basket up here, and that basket's not doing too hot as the price goes down. So right now the price has in the most recent time intervals kind of shot up again. But in the future, we're going to want to take a look at what could we do to maybe prevent, even if this, according to certain features that are driving our model, even if this looks like an attractive dip to buy, maybe it's worth sacrificing. Maybe this would have shot up significantly from here instead of going down, but maybe it's just worth it to avoid getting caught in this conundrum that we're currently in, to just ignore buying opportunities like this and say, maybe take a look at a little bit further back in time and say, relatively speaking, are we at a pretty high price right now? If we are, let's hold off, even if it means missing on an opportunity that could potentially become lucrative. Maybe it's better to just enforce, let's wait until the price goes back down to a level that's historically speaking a lower relative price before buying in again. Okay, so anyways, that's just some thoughts that I have. And now let's take a look at what the impact on the system actually has been. So we have up here in the top hand right of this little dashboard that I made a manual number that we can input. And this one just happens to mirror the actual average duration for how long an order lived from when it was bought until we sold. So on average so far for the orders the system has completed, it takes almost 8 days, so 7.8 days. And when I plug this in up here, that's just going to impact in some of these charts what we see as orders that are overdue. And now in this case, all the orders, the system has been congested for long enough. It started getting congested around February 10th, February 12th. Right now we're sitting at March 1st. So if the age at which an order becomes kind of stale is about 8 days, then all of the orders we currently have open are stale. You can kind of see that over here. The average age of an active order is 19.1 days. So of course, if the threshold is 7.8, everything is going to be looking like it's overdue. Now, if we were to change this to, let's say, like 20, then we would see that some of these sell second orders that are not yet completed are going to show up as blue because they're not going to be old enough yet. Like all the orders showing up in blue, these are orders that aren't yet 20 days old. The orange ones are overdue because they are now older than this order age threshold. Okay, so let's set this back to 7.8 and let's just walk through this. The visuals here, You know, I'm not saying this is like the best way to visualize this stuff, but it works for me. And it tells me what I need to know, or what I want to know at this point. And so for starters, I want to be able to just eyeball the cumulative gains. Now, what we see here are the gains from these trades where you buy first and you sell second. You know, you buy low, you sell high, and we can see, you know, over time, how are those gains trickling in? And we're looking at this through two lenses. The gray line here is telling us what gains we got when we look at that order, like for each order, and we look at the gains it produced. The gray line's telling us the day that we bought, and then the black line's telling us the date that we sold. So we could actually get rid of one of these lines if we wanted and just look at this through one single lens. But for me, I kind of like to see it this way because as you can see here, these lines aren't exactly identical. Like this gray line, we're kind of, you know, in terms of buying, we can see that our profits are coming from, you know, some orders initially that were bought in this string of days. Then we kind of have a drought, and it's like, okay, that now suddenly we're getting more profits coming in, but that doesn't mirror the same story on the sell side. When you look at this on the sell side, it looks like the hot spot for when profits were gained are really orders that were sold between February 8th and February 10th. And that kind of might be an indication that there was a really big spike up in price around this time. You know, maybe we can confirm that over here where we see this is the 8th. And yeah, so at this point, this is the actual price, not the smoothed out version of the price. So by the time the smoothed out, exponentially smooth version of the price determines we're at a local maximum and it's time to sell, yeah, we're probably right there somewhere between the 8th and the 10th. Okay, so anyways, this just kind of helps us see, like, especially at a point of stagnation, you can see that this the cumulative gains just flatline here, and that's because our system had filled up all the seats that it could fill up in terms of buying, and it's just waiting for some of those seats to empty so that it can fill them again. And those seats won't empty, you know, those slots won't open up for more orders to be made until we have closed some of those orders that were already opened. That's kind of a way of limiting the amount of resources that we put in at any given time so we don't overextend ourselves. You know, like if there's a market crash, I've built it this way so there's always the system's only ever going to consume a certain amount of resources. It's not going to run out of control on me and convert all, you know, 100% of my available purchasing currency into orders that you know, like we've seen here, can go stagnant and potentially, like, what if that price never bounces back up again? Then you just spent all of your resources on losing trades. Anyways, let's take a look at some of these other visuals. So over here in this chart, I like to see in a you know, normally I'd look at data over time in a line chart, but in this case, each individual block is a different trade, and I like having, you know, a kind of discrete entity for each one of my trades that I can look at here. And what we're seeing is when trades were opened. So over time, you know, this is showing us that on the 2nd and the 1st of February, we didn't really open many trades. We opened one trade on each of those days. However, then on the 3rd of February, we opened quite a number of trades. And what I would like to see is, if you go immediately down here, I want to see something kind of like what we see on the left portion of this chart, where these trades are no longer here. So down here in this visual, all sell second orders not yet completed. This is showing us the orders that we had opened up here, but that have not yet been closed. And this is going to have a blue color if that order is still fresh, and it's going to have an orange color if that's a stale order that's exceeding the order age threshold set up here. Now, as we can see here, this shape down below almost exactly mirrors that above, which tells us that ever since February 6th, we've been having some trouble executing the sell side of our pipeline. Okay, so then if you go even further down, this is showing us all sell second orders that have been completed. So whereas this gives us the picture of what did we open that still hasn't been closed or sold, downstairs down here in the bottom chart, we're seeing over time when did we actually make our sales. So some of these that are closed here, these are the orders that we opened over here. And this just allows me to keep an eye on over time. How are we selling? How are we buying? Are we entering all of our trades on the same day? Like, is it the same spike or, upwards in price that all of our correlated symbols pick up on? Or is it more ideally a situation where you kind of, you enter a few trades on one day, you enter a few trades on another day. In an ideal world, the system's not just going to be putting all its eggs into, one price movements basket, which unfortunately can happen when you're playing around with cryptocurrency and a lot of your trading symbols are very highly correlated. Okay, so there's not really enough data yet to draw any conclusions, except that I'm pretty sure I want to put in some logic to avoid situations like what we fell into in the first iteration of this launching the system, where the dip on paper looks good to buy, but it's a little bit risky buying into any dip where this price is, relatively speaking, like if you look back a couple hundred samples, this is one of the highest prices you've seen in recent history. So I am going to put a lot of thought in the next week into what's a smart way, what's a clever way to maybe tell the model to calm down if it's recommending that we make a bunch of purchases at a price that's relatively high, historically speaking. Okay, so then over here we just have some simple, almost like a histogram, like binning of trades, where we want to look at the distribution of the age of our orders that are kind of stagnant, that are overdue, whose age is above the order age threshold. So in this case, we can see that our stale orders range in age from 10 days old to 25 days old. And I would expect over time that this should be like a normal distribution. I want to see most of these orders in the center, and then we'll have extremes on the high end and the low end. That to me seems like a healthy kind of flow of trading behavior. And the same thing on the time to complete orders. So we can already kind of see a normal distribution. If we were to draw a line in here, it's normal-ish. But over time we'll get a better feel for this. This will come to life a bit more. So that's pretty much it. That's the update for this week. There is a little bit of activity happening on the sell first, buy second trading cycle, but those are operating on a less granular timescale. So this system's operating at the hourly level, making decisions every hour. The sell first, buy second strategy is operating on the 6-hour time scale. So I think I want to give it a little bit more time, let those trades play out a bit more before having a more in-depth conversation there. But this is the update for now. Looks like we've suffered through a downturn in the market, but then the prices are shooting back up, and we definitely need to address how can we make the system more smart at avoiding entering the market at relatively high price points in time. Okay, so until next time, see you around.